it. So first things first, we get into it. So I don't want to just dive into it immediately. I want everyone to have an understanding of what USDT and Nasdaq is, and also how I trade them and how you can use information in this trading alchemy course to basically help you level up your own trading. So first things first, I'm going to cover USDT and Nasdaq. That'll be our main focus for the month of June and July. So let's get into it. So first things first. First things first. It's my mistake. As you guys know, trading does involve risk. And Vault Market is a product of First Fintech Capital, also now known as Neo Brokers. And we're trading with the company number 2020/936-46607. And as you guys know, trading instruments like USDT and Nasdaq involves a lot of risk and may not be suitable for all investors. And that's also why I've decided to touch on this. Because I myself, the first time I traded, so here's a fun fact. The first time I traded Nasdaq, I had a $20 account and 20 pip stop loss. My stop was hit, my entire account was gone. I didn't understand contract sizing. So that is a very important thing you have to look at. With Vault markets, they are very, very volatile. So just be mindful of your risk management. So the information provided in this webinar series is for educational purposes only and shouldn't be constructed as financial advice. I'm not a financial advisor. What I'm sharing with you guys is purely from my personal experience and how I execute on the market and perceive the market. Take everything with a grain of salt, go practice, collect your data, and make responsible decisions from that. And also, as we stated in the disclaimer before making any trading decisions, please ensure that you fully understand the risks involved and also seek advice from a financial advisor. Okay, now that we have the legal stuff out of the way, what's on our agenda today? So we're going to talk about what is USDT, what is Nasdaq, the market maker ideology, determining your bias and types of strategies. So the PowerPoint won't be a lot. We'll mainly cover some theory and some practical. And obviously from next week on, we'll go more into the practical side of the analysis and so forth. But if you don't understand the theory behind everything, it's a no bueno. Okay, so what is USDT and Nasdaq? So overview of USDT. USDT, also known as the Dow Jones Industrial Index, is a stock market index that tracks the 30 top performing publicly owned companies listed on the stock exchanges in the US. Hence, these US and Nasdaq equities are purely for US based companies. This is why we mainly see guys trading them in New York session when the volume comes in. I'll try and remember what I want to share with you here regarding the timings, but it will just be a fun fact which you can also include into your caliber of knowledge. So it's very important that the USDT represents the overall health of the US economy and is a key indicator for market sentiment. Okay, so that is USDT. Then Nasdaq is a list of the top 100 securities issued. Wait, sorry, my bad. The Nasdaq 100 is a stock market index made of equity securities issued by 100 of the largest non-financial companies listed on the Nasdaq Stock Exchange. So technically what's happening with Nasdaq is the top 100 performing companies in the US. Hence, if anything happens to any of these companies, it will also have an effect on the index itself. Okay, so now that we have covered that, the main thing, guys, we've covered this in Alchemy Day 1. And I highly, highly recommend, if you haven't checked out the Alchemy series yet, please go check it out, because everything I explain here might not make sense to you. So with any period trade, understand this, that as long as there is a spread, a bid and ask, it moves up or down or sideways, there's a market maker present or a composite man present. And with anything, there must be liquidity, there must be buyers and sellers, and that is basically what creates this order flow in the market. So the main thing is AMD is key: accumulation, manipulation, distribution. This goes back to our ideology of how the market maker basically operates. Accumulating Asia, a fake move in London, giving us the move in London. But then if you move into New York, seeing London as the fake move and New York as the distribution phase. So it's always important to have this as the basis of your approach. Spotting the accumulation, because then you know there's liquidity. Spotting the manipulation, knowing that there is people on the other side of the market, on the wrong side, and obviously you're gonna get in on the distribution. Good afternoon, Chris, my man. Hope you're doing good. Hope you're doing good. Okay, so then the best way or the best times to trade these indexes is basically in New York session, because like I said, it's mainly based off US companies. So what happens? I don't think this is something a lot of people actually think about or look into. But I think we also spoke about this in Alchemy Day 1, where I showed you guys the world map basically, and how the sun and moon moves, and how different parts of the world get up, go to sleep, markets become active, markets go to sleep, and so forth. So these markets become most volatile in New York session. Yes, they move in Asia. Yes, they move in London, but it's not recommended that you trade in those times. Now, I have had trades where I enter in London, hold into New York, and I hit full TP. But this is why the importance of order flow and structure must still be considered. But mainly, as you guys have seen, most guys, they enter when New York basically opens. So it's always best to wait for your fake move at the comics open and do liquidity sweep. So remember, let me see if I can't draw on here real quick. Okay, so let's say for instance, this is your Asian session and this is your price consolidated, right? Now let's say London session comes in and it takes out that high and moves down. All right, technically there's a trade for you in London session. There's no need for you to be greedy because you've now targeted that sell side liquidity. Now, with that said, you now have new highs and lows, the high of London and the high of the high and low of London. Now that becomes new liquidity points which can be seen as your Asian high and low, for instance. Like I said, if you haven't watched Alchemy Day 1, please go watch it. Then basically what happens is when COMEX opens, which is 3:30, you either want to see one of two things happen. Either because the move has taken place in London, most likely what will happen is price will consolidate again. What happens when price consolidates? We accumulate. After we accumulate, we have to manipulate and then we distribute. So accumulate, manipulate, distribute. Right? Then accumulate. Now the question is, which side will they manipulate? This is why it's very important for you to wait for them to show you. It's very important for you to wait for them to show you their hand, because you have sell side liquidity at this level, and you have buy side liquidity at that level. If price now moves to the upside, what's actually happening? Manipulation. But what's going to happen is they're going to take out these highs. So most likely from this level, what you look for is that reversal to look for that move back to the downside. Well, alternatively, say for instance, okay, so just imagine this over here, okay? So imagine now this is that accumulation after London, and you have that high and that low. If this point over here basically gets manipulated to the downside, you want to see that reversal so that you can target the buy side liquidity at that point. Okay, I hope that makes sense. Just let me know in the chat if I'm going too fast. But I feel like we have to always cover this because it's very, very important, and the smallest things make the biggest difference. So it's very important: accumulation, manipulation, distribution. Best time to trade is in New York, and always wait for the open to take place at 3:30. Okay. So determining your bias, we have spoke about this now. Your bias basically, the thing is, before the move takes place, you must have an idea more or less as to what price will do. You must understand the market to such an extent that, let's say for instance, let's see over here. Sorry. There we go. So let's say for instance, this is your accumulation phase, and let's say this is still Asian London session. Before the COMEX Open even takes place, you must more or less already have an idea or have an expectation slash anticipation of what you want the market to do. Meaning, if you have a zone up here, potential sell zone and potential buy zone down here, you should know already that, okay, if they're going to accumulate and I have a sell zone up here, what's going to happen? They have to manipulate to the upside for me to sell to the downside. If they accumulate and manipulate to the downside, they have to accumulate for me to move to the upside. Okay, so that's a very important thing. You have to more or less have a clear, determined bias way before the move actually happens. And here's the other thing. When the move happens, let's say, for instance, you have your zone, you have your accumulation. Let's say you have a zone marked out user. I will still see if I share it publicly, because it seems like if I share things publicly, people don't value it as much. So if you miss out, you miss out. But I'll think about it. Okay, so let's say, for instance, you have a zone up here, right? And you want to sell from that zone. That's your anticipation. But you have a zone down here as well. Now, because you have anticipation, just because the market now moves to the downside doesn't mean you must panic. Because as my mentor always told me, don't try and predict the market. React to what the market shows you. Because if you try and predict the market, you're going to emotionally get attached to that move, and you're going to start justifying. Let's say, for instance, you want to see, price move to this upside level over here. But let's now say price moves to the downside at this level down here. When you see the market basically trading to the downside, you have to wait for a perfect entry criteria. You have to wait for your confirmation pattern. So if that pattern doesn't take place, it doesn't mean you must now blindly go buy here just because you think that, okay, they've now manipulated, they have to go to the upside. It's not that simple. Everything in theory seems simple, but you have, but only through months and years of backtesting, actual live trades, journaling, and so forth, will you actually collect that data and have that information in your subconscious mind to actually make those types of decisions. What I mean by that is, let's say, for instance, the market does this, it trades below the level. Now, let's say they trade up above it and they trade back below it. Now you justify it to yourself, oh, but the fact that they're holding down here shows me that I can still go long. And now you enter, get stopped out, you enter, you get stopped out, you enter, you get stopped out. By the time the market actually starts moving up, your account is blown. So this is why it's very important for you to stay disciplined and wait for the market to come to you. I always make this example. You can't chase a moving bus. I think all of us here have used a public transport. What's that? What happens when you miss at the first taxi? You wait for the next taxi, right? You can't chase the taxi to Corsa now because they already left. Okay, so determining your bias is very important. So one important thing, or one interesting thing to note about US30 and Nasdaq is the fact that it's been a long-term bullish trend on US30 since the 1920s. And since 1971 on Nasdaq, providing us with a long-term bias. So we can see on US30 for the last 100 years, the market has been bullish. We can see on Nasdaq on the last 50 years, the market has been bullish. So long term, what will we expect? We will continuously expect price to make those higher highs. Why? Also from a fundamental perspective, because it's based on the top performing companies. Now, here's the thing. It almost becomes inevitable that the market will crash at some point. But if you think about it this way, the only way Nasdaq and USD can really crash is if all these companies fail. Now, what's the chances of that happening? Understand what I'm trying to say? A good example of this is, let's look at COVID. Let's do this quickly. I just want to see. Oh, wait, let's do it like this. So I just want to give you guys an idea real quick. Okay. So this was years 2020, COVID. Now, even though there was a crisis during this time, look how the market basically just moved the entire. Oh yeah, fun fact. That's what happened at the beginning of the year. Fake moved to the downside, inducing short before the market just moved to the upside. So the question is, why did these companies perform the way it did? Oh, actually, yeah, you can. Well, I'll go back. I'll come back on that now. The question is, why did it perform the way it did? Okay, so let's go back. Sorry, I just wanna really make you guys understand. I don't wanna half-ass what I'm explaining here. So the Dow Jones is publicly owned and listed companies, right? And Nasdaq is the top 100. So if you go and look at companies, so here we can see what is on this list. Amazon, American Express, you know what that is, Apple, Boeing, Cisco, Goldman Sachs, Intel, Johnson & Johnson, Coca-Cola. Okay, why I'm showing this to you, Amazon is what? An online service. So in COVID, there was no physical contact. The US gave us stimulus checks. What do people do with that money? They bought online. Amazon, biggest retailer online, why did it go up? Because money went into Amazon. American Express, American Express is I think it's a bank if I'm not mistaken, online. Boeing, Boeing I think is sorry, I just want to double check. I'm not sure it's airlines or war. Yes, aerospace. So also with Boeing, basically we didn't have any flights or anything. However, high-end figures could basically travel around. My point here is, if you look at most of these companies, they are online companies, right? So it's not like they were affected by anything physical. And that is the thing, you guys, that's the thing as traders we have to understand, or we have to be able to decipher in that sense, actually making sense of things. Like, and actually breaking it down from a fundamental perspective where if you're to an 8-year-old must make sense. Okay, so it's very important for us to note that extreme pullbacks are going to take place, but we can't always expect when that will happen. Another good example of this is, so okay, sorry, this was Nasdaq, not US30, but Nasdaq, you can see this was a massive move to the downside. So what happened? During this time, obviously there is panic in the market. Oh, the market is crashing, the market is dropping. But if we compare this to the all-time move, that's like almost nothing. And look what price did after that. It basically almost doubled. It basically almost doubled the move towards the upside after that, right? So that is one thing I want you guys to basically look at. So we can look for sells, but it's very important for you to understand that you can't try and sell to all the way back to zero. Learn to take your profit. That's really important. Then follow market structure and order flow internally and externally, meaning always have a perspective on the long term, what's happening on the charts, and also be mindful of the small problems happening within these companies that will have short-term moves that will cause these stocks to quote unquote crash a bit. So you can take advantage of that. And this is the beautiful thing. Because we don't own anything physically when we trade this, we can buy and sell. And the thing is, we can make money quickly on this because we don't have to hold this for 50 years to actually see a return on our investment, if that makes sense. Okay. So this is basically a stock chart to just show you this is US30. Ever since the 1920s, more or less, price has just been bullish, This is Nasdaq. You would see price has just been bullish. So we can see long term that we should continue being bullish on this pair until like we can at least see that, okay, guys, this recession, like things are actually going down and it's bad for these indexes. Okay, types of strategies you can use to trade US30 and Nasdaq. Now, guys, very important. Any strategy can work. any strategy can work. It's up to the individual how they trade strategy, because the thing is, it all becomes psychological. If you can't control your emotions, then it's inevitable that you won't be profitable. Good example, you can give two people the exact same strategy, but the person who is not disciplined will not make money. The person who is disciplined will make money. A good example as well, you can give someone a strategy with a high win rate compared to someone with a low win rate, and the person who's more disciplined with the low win rate will have more profits than the person with the higher win rate. It all comes down to the individual. So these are just things, some of the things I've pointed out that I've seen. So supply and demand, ICT, SMC concepts is a method that most people use to trade. I myself use some of these concepts: supply and demand, fair value gaps, imbalances, liquidity, my OTE on the FIB, and so forth. Then you have guys who enter literally at the open. I'm sure you guys have seen this, people who literally wait for the open of the comics. They trade the open volume and they want to cash that one candle and get out of the market. Some people scalp Nasdaq and US30. I wouldn't recommend scalping it. I wouldn't scalp it purely based off the volatility. Now, it depends on your contract size as well. If you have a small contract size, your risk is obviously smaller. But if you're gonna try and catch small moves on a small account with Volt, for instance, then I would recommend doing it on a micro account. So scalping is one. Then you also have support and resistance techniques, also key levels. There's also something that you can use. But like I said many times in the Alchemy as well, you can look at so many strategies and you'll see that they all boil down to the same concepts. It's just basically explained differently and given different terminologies so that people can sound cool, they can sell you their course and so forth. But in the end, it's the same concepts. And this is why I feel like I want you guys to really like, let me put it this way. We all want to make money, yeah, right? We all want to make money. But how are we going to make this money? If we can't successfully analyze our charts, the money won't even follow. So this means that in order to make money from trading, you really have to have a true understanding of how the market works. But here's the other thing: if you don't have a passion to study for something, you're gonna be lazy to do it. You're not gonna put in the time like other individuals. I'll make this example again. A lot of guys tell me that, Jevon, I want to trade like you, but none of them want to put in the amount of hours I've put into backtesting, developing things, journaling, and so forth. So it's up to you as an individual to actually go learn and understand the market works, because in the end, I can only show you how this is done. I can only give you the information, but it's up to you to actually apply it and become disciplined with that information. Okay. So what I'm gonna do now here is I'm just gonna kind of run down with you guys how I approach the market and kind of just give you guys something to go think about. Like I said, I won't go deep into like specific strategy here because we won't have enough time. But here's some things I want you guys to basically go and look at. So I'll open okay. Open a blank chart. And initially what I do is like we said, we just look at the internal structure. So for instance, we'll see that this is where we currently are on the market. What I do is I break the market down using time. So what I do is I literally, all I have to do is, since we're now in 2024, I go mark out 2023. So that is 2023 is open. So that's the low for 2023. And then I mark out my open of the year. Okay, so now we can see here's the low of last year, there's the high of last year. So now a quick one. We are now kind of halfway through the year. What happened in the beginning of the year? The market moved up. Pullback, moved up. So technically the market has only gone one direction since the year has started. So from a standpoint of the composite man, like I've told you guys, fake move, beginning of year, beginning of month, beginning of quarter, end of quarter, beginning of week, end of week, beginning of day, end of day, beginning of session, end of session. So seeing that there's a low at this point, I would expect price to long-term trade down, close below this level, retest it, induce everyone to sell who sees this as support that is flip resistance or resistance, or yeah, resistance that is flip support, have them induce them short, and then I will start looking for my buys again based off the demand zone, which has been left over here. But I can only look for that once we get to this level. So we can also see, take it a bit further. This is where price broke structure. This is our weekly break. That weekly break left us with a demand zone over here. So you're like, oh, but Jevon, now you have two zones to trade from. It's important for you to have zones. So you only react to price when price comes to your zone. So it's obviously a massive zone. I mean, you don't want to be entering on a spot like this and have a massive stop loss. So what you're going to go, what I then do is I go and refine that zone. So I go to my 4 hour, or you go to your daily. It all depends on how you wanna do it. Now look at my internal order flow. So I'll see here, this is the last high prices left before forming this lower low. This is when price broke above it. So this is my 4 hour change of character. Price left sort of demand zone over here. We can see that demand zone has been filled and mitigated. Okay. We can see price made a further break of structure above this level. We can see new demand was left over here. We can see price has tapped into that demand zone and now move to the upside. We can see here's the next break of structure. Price left us with its demand zone over here. Now, looking at this, we can see here's a zone that is unmitigated. So very simple. We can now go take this massive zone we've marked out and go refine it at this point. Okay, so now we know that's our strong demand zone for the 4 hour or base of our weekly. Now we can take it a bit further. Okay, so I'm not going to do every one of them. But initially, here's your 4 hour break. I'm just going to do it like this. So here's that demand. 4 hour break. So initially, okay, so that's been mitigated because there's that break. And then technically, okay, so that's not been mitigated. My bad. So that's still a valid point. Demand. What is this? Notice that the action, how price tapped into it, and then you have it move to the upside. Okay, let me just. Now there you can see there's that mitigation basically. So from there, take it a bit further. So here's also one thing I want you guys to be mindful of. You can see also this is the demand which price is left. So it's two ways you can perceive it. You can either use that candle there or this low. I'll use that candle with the wick. There's that further demand. So this wouldn't per se count. Oh, damn. I see we only have 10 minutes left on this session. Sorry guys, my bad. This is supposed to be on the Volt Markets thingy. It's supposed to have a paid version, but okay. But okay, take it further. It's a quick one we can see. So obviously this is price made higher highs. This is the highest point which price is made. And when pulled back, it only broke below this level over here. So this is your further change of character basically. Oh, damn. So here's a change of character. And then price left us with the supply zone over here. So now the next thing we'd expect price to do is to do this. Tap that zone, have retracement. Either when we come back to this level, tap into a smaller time frame demand, then move up. That is the idea. Or alternatively, we will see price disrespect this level. Let me make an example there real quick. So we potentially see something like this candle form. And then we'll see a next candle, for instance, do something like this, a huge bullish candle. Then with that bullish candle, if it breaks above the supply, it will then flip supply to demand and then put us in a position where we can then continue looking for buys to the upside. So that's the one way I do it using supply and demand. Now, if we flip to the 15 minutes, sorry, just scared we end, our session ends, we only have 8 minutes remaining. I want to just show something with you guys, I shared with you guys in the beginning of our trading alchemy. So we'll start off here on a Monday. What do you guys see over here? You can see Asian range. We'll cut it off here. So it's orange line. We'll start here. Break above. We look for sales that day. So we can see price broke above. No valid trade took place because look at the timing. Price broke above. There was no entry criteria. Price only started dropping in Asia, so that doesn't count that day. Next day comes. Break to the upside. What do we get? Sells. That sell. Fair value gap. There's a move to the downside. Even here, a break below, sweeping that Asian liquidity, which has not been picked up yet. And that's how price will move to the upside. Here we can see once again price breaking below the box. And what you get? You get buys coming in that day. And the question is, where do you get the buys coming from? There's the demand zone which left over here when price made a break of structure. There you can see that tap into that level. And obviously, following the order flow, break below. Here's that supply zone over here, which then flips price to the downside. We can see here once again the next day, price breaks above. What do we look for? Sells. We can see here price below. What do we look for? Buys. We can see here once again, price breaks. Okay, there's no clean break. Price breaks above. We look for sells. Price breaks below. We look for buys. So the same exact ideology I shared with you guys in day one. You guys can see the exact same rules, methodology, mindset applies everywhere. This method is timeless, and we cannot deny this happens every single day. Now, obviously, we know nothing is perfect. It won't happen exactly the same, like over here. Here's a good example. We can see price broke above and never took out this Asian low. But usually these Asian highs and lows that are untested becomes reference points for the future. We'll see quickly if we can make one more example before we leave. Here's another good example. Notice here, this Asian low was never swept. Notice this after that sweep, what price did. Let's take it a bit further. Let's make another one more example. Yeah, Asian low was unswept. Look when price got there. Okay, so this wasn't a big one, but initially you can see price to trade below and price went back above it. Another good example, so both swept there, swept. Over here, good example, this Asian low was never swept. Swept, goes back up. This Asian, I don't think price came back so far ever since then. But yeah, guys, how did you guys find this session? Did you guys enjoy it? I'll obviously speak to Tandem to make sure that next time we have the paid version of Zoom ready. I'm not sure what happened here today, but how was it for you guys? You guys enjoy it? And then a quick one. Anyone who wants mentorship, all right? Feel free to message me. My number is here in the chat, 078-508-1254. Message me on WhatsApp. If you guys need mentorship, one-on-one sessions and things like that, feel free. And then because you guys are all Vault Markets clients, anyone who's not under mentorship, you guys get 50% off our program, lifetime access, or you have the option for a monthly plan, 50% off. full access to my mentorship, my strategies, live trading, and of course my members. I also have ordered myself a potent PC. So also Sunday nights we're gonna start breaking down the market before the market even opens. Okay, so let me quickly get the comments here. Yes, unfortunately, the session will be sent to review. I must also, if I want to upload it, I must edit it. So there is a disclaimer on here, but I must edit another disclaimer on it just to be safe, beginning and end. So people can't say they haven't seen the disclaimer. So most likely this will only be uploaded tonight or tomorrow. But Kolani, yes, so every Monday we'll continue with the Alchemy sessions. This month we'll focus only on US30 and Nasdaq, and potentially July as well. And then obviously we're trading live 3 o'clock on YouTube, myself and Keegan. I might not be there. I might have to do a meeting with MoneyTech. We're finalizing a few more things for the site. To my people under my mentorship who is here, tomorrow we will be going live again as well on MoneyTech. Things should be sorted now. I have a piece in the office I can use again. And Max, I got you. I'll send you my schedule for next week for one-on-one sessions. I am open next week. But yeah, like I said, guys, any sort of help you guys need with trading, feel free to reach out to me. I love doing this for you guys. I love the Alchemy sessions because I feel like we put a twist on everything, you know, through a type of story kind of thing. I feel like a lot of guys make it boring and like, you know, whereas in the end, trading on purpose, right? And from everything I've shared with you guys and so forth, it's not anything I've made up. It's literally based off research. I'll say it again. If anyone doesn't believe in the market maker method, prove me wrong. I've studied this. I've done this since 2019 for the past 5 years. I haven't changed my method up once because it is so timeless. It happens every single day, every week, every quarter, every month, every year. But yeah, guys, much love. Glad you guys joined in. Any questions you guys have in regard to the session and so forth, you guys know where to find me, either on WhatsApp, Instagram, Telegram, and so forth. And literally, I love being here with you guys. So until next time, And also, before I go, like I said, guys, if you guys need help, 50% of our mentorship program, hit me up.